It was a solid fiscal second quarter for Disney. The media giant announcing Wednesday after the market closed that its streaming service Disney Plus added 7.9 million global subscribers last quarter, bringing the total to 137.7 million. Disney now boasts over 205 million subscribers across its direct-to-consumer business. Disney's cash cow, the theme parks business, also came roaring back. Its parks, experiences, and products segment, which is mostly made up of theme parks, reported revenue of $6.7 billion and operating income of $1.8 billion versus a loss of $400 million in the same period last year. Not only has attendance made a comeback with all domestic parks being open, but visitors are spending a lot more money per visit too. CEO Bob Chapek noted that per capita spending at domestic parks grew by more than 40% compared to the same period in 2019. It's worth noting that Disney's fiscal second quarter is usually seasonally the weakest quarter for Disney's theme parks. Unfortunately, international parks haven't been thriving as much due to COVID-related closures at Shanghai and Hong Kong during the quarter. Disney CFO Christine McCarthy noted that the company expects about a $350 million hit to operating income in fiscal Q3, coming from Shanghai and Hong Kong parks. There's still no estimate on when Shanghai's Disney park can reopen its doors. Despite the strong quarter, investors are hesitant about Disney's future amid growing global economic uncertainty. Macroeconomic pressures are showing no signs of abating, with inflation persisting near four-decade highs, looming recession fears, a tight labor market, and continued supply chain disruptions. All of these factors will likely put immense margin pressure on Disney across its parks, affecting merchandise, food, and beverages. Even as management said demand is extremely high, the threat of a dip in visitation at theme parks is increasing as prices continue to ratchet higher and consumers decide to pull back on discretionary spending. After all, what supports Disney's unprofitable DTC business? It's its very profitable theme parks business. Without it, there is little hope for sustainable growth. With all this uncertainty, Disney will have to do a lot more to prove to investors that its growth story remains intact and it will be able to weather the storms that lie ahead. For more in-depth analysis, head over to variety.com/VIP.